Here at Angel Oak Mortgage Solutions. Thank you for joining us today as we look into doing a deep product dive into our bank statement program. I'll introduce our subject matter experts here in about a minute to a minute and a half. We'll give everyone about a minute to log in. Good group of numbers coming in here. So hope everyone is having a great holiday season so far. But we really do appreciate you taking the time out of your day to learn a little bit more about our bank statement program serving self-employed borrowers. Just a couple more. A lot of people logging in. Bear with us. We'll get started. Just so everyone's aware, this is going to be recorded. We do have a question box for you also, so we're going to get your questions through that question box. And if we, by chance, do not answer any questions from you specifically, your account executive will reach out to you. This recording will be sent out before end of day tomorrow. So look forward to having fun. We've got our subject matter experts who are no rookies to this call. We've always been on a lot of them and deliver great content. So give it about another 30 seconds. Still people logging in. All right, let's get started. So again, my name is Jeanmonod, Regional VP of Sales here at Angel Oak Mortgage Solutions. Wishing everyone here on this call, and if you weren't here and you're getting the recording, happy holidays and a safe holiday. So our two subject matter experts here, basically stretching across the country here. We've got Jensen up in the Northwest. Annie, please introduce yourself. Tell us a couple of things about yourself.
Hi, everybody. Thank you for joining us this morning. But I've been a part of the Angel Oak family since 2015. And as John said, I'm up in the Northwest area, so I cover the Washington and Oregon territories. And I absolutely love what I do, and I'm super excited to teach you all more about bank statement loans. A little bit about myself, since I do live in the Northwest, I love to ski. We have an early ski season up here, so I'll be hitting the hills this weekend, and happy holidays to everybody.
Thanks, Annie. And then I've got the pleasure of introducing Scott Gruebele, who I work with on day in, day out basis. Scott's in Florida. Scott, please introduce yourself.
Yeah, thank you, John. Thanks to everyone for joining us. I'm on the complete opposite side of the country from Annie. We're covering basically the entire U.S., but I'm down in South Florida, guys. I've been with Angel Oak since 2016, covering primarily the Broward County area. I'm the complete opposite of what Annie's going through right now with skiing. We're seeing the beach, we're seeing the pool, we're seeing, all that fun stuff. But I'm glad to be here with you guys to talk about the bank statement program today.
So we've got East Coast, West Coast, and I am stuck in the middle here, right in Texas. So again, my name is Jeanmonod, Regional VP of Sales here at Angel Oak. Been here about 8.5 years. So between Scott, Annie, and myself, we've got 20+ years of experience just at Angel Oak, so which is awesome, and you're going to learn a lot from Annie and Scott today. So, but before we get today is going to be a deep product dive into our bank statement program, and bank statements are our most popular program for self-employed borrowers. It's a very, very, very underserved market. But before we have Annie take us through the highlights, we're going to launch a poll here, and the poll basically: who has originated have you originated a bank statement loan in the last 12 months? So let's launch that poll. Annie and Scott, I'm just going to ask you guys if you can see the poll there. I just want to go over a couple of statistics, though, while we're waiting for our attendees to respond. In 2020, new business applications grew by 24.7% over 2019, which was the largest increase in new business applications in over 10 years. In 2021, new business applications grew by 22% over 2020. So self-employed borrowers are the fastest growing segment of the workforce today. So we hope we're going to teach you a lot today. So guys, what were our poll results? Were you able to see those? Hold on. Okay, this is kind of runs consistent what we've seen over the last And we've been doing these webinars for about 26, 27 months. It's pretty consistent. 67% have not originated a bank statement loan in the last 12 months, which is great because this is a huge opportunity for the fastest growing segment in the workforce today. So let's jump in, Annie. We're going to take you, everything we're going to do here today, by the way, is on our website. And so Annie's going to cover some of the highlights. Then Scott's going to talk about what we like to see on a loan application. And then we're going to talk about credit. And then we're going to jump into Q&A. So go ahead, Annie.
Perfect. Okay, so the bank statement loan, this loan is designed for your borrowers that have been self-employed for a minimum of 2 years. And 1099 borrowers also qualify for this program as well. So the way that it works is we are not going to review anything on the tax returns. So throw away the tax returns, burn them. We don't want to hear about them. If they have not filed their taxes, if they have not paid their taxes, we don't care. We're not going to find out. The way that we're going to derive the income is we're going to review their bank statements over a 12 to 24 month period. If we're reviewing their business statements, they just need to own 50% of the company. If we are reviewing their personal statements, they just need to own 25% of the company. So if we're reviewing the business statements, we're going to review those monthly deposits, and we're going to use an average of those monthly deposits over the 12 or 24 month period. Now, being that this is a business, when you're working with your account executive through the pre-qual phase, we will ask the borrower to complete a business questionnaire. And on this, we are going to gather the information, the size of their business, do they have any locations, how many employees do we have. From this, we're going to determine the expense ratio. So standard that we use is 50%. If it turns out it's a larger business with higher overhead, we will go up to 70%. If it's a very small business, maybe they work from home, maybe they have no employees, then with the CPA letter, we can actually go down to as small as 15% expense ratio. So that's if we are using the business statements. Now, if we are using their personal account, then what we're going to do is we're going to take, as long as we can see that they have at least 2 months business statements, so we can see the expenses coming out of that business account, then we will use 100% of those deposits going into that personal account. Now, let's say if we're working with a 1099 employee, and it's very popular among them, they don't have a business account, then we will use that personal account. We'll just underwrite it like a business account. So we're still going to have them complete the business questionnaire. We still will apply that expense ratio. So hindsight, that's how we're going to be qualifying the income from these bank statements for these borrowers. So we find a lot of time, even if they do qualify from the tax returns, and this is not uncommon, maybe they qualify for $600,000, $700,000, $800,000 purchase, but they have that eye on that $1 million 1.1 purchase. A lot of the times we can get them qualified through their bank statements to qualify in the purchase price that they do want to buy. So now this program, we started out at a 660 credit score. We go up to 75% LTV. And then with a 740 credit score, we'll go up to a 90% LTV. And then anytime we go over 80%, there is no mortgage insurance on this program. Minimum loan amount's $150,000. And then we will go up to $2 million up to 90%, and then $3 million up to 80% LTV. So we do have to verify housing history. So rent-free is not allowed whatsoever. If they do own their current subject free and clear, then we waive verifying housing history since they own that property outright. So we do offer an interest-only option on this program. So especially that's a great alternative, especially in some markets where we have, higher values. And now the interest-only calculation is calculated over a 20 years. So it's amortized over 20 years, and then they have the interest-only period for the first 10 years. So it is a 30-year loan, and this is offered on all occupancy types. We could do it on all types of transactions, purchase, cash out, rate term, and then we can also do delayed financing. So if you run into that borrower and maybe they had to do a quick close, or maybe they didn't qualify at that time and they bought that property with cash or possibly even hard money, we can now help them out and turn around and do delayed financing for them as well. And so reserves on this program is going to be 6 months. But the moment we do go over that $1.5 million mark, we need to see 12 months in reserves, and then we also have to have 2 appraisals ordered on that property. Our DTI is going to be 40 on the front end, 50 on the back end, and unless we're doing investments, and then investments is just a solid 50% across the board.
Perfect. Thank you, Andy. Appreciate it. And I guess we kind of covered the Northwest. We got the South. Tanya on the call is from Nashville, Tennessee. So Tanya, thank you for participating. We look forward to getting a lot of questions from you. So Scott, and again, this is a deep product dive, and when we talk about this in the past, we've always said, at the end of this call, you should be just as fluent in this program as our account executive. So Scott's going to take us through what are the most important parts of the 1003, Scott, that we like to see, and maybe what we don't want to see when we look at a 1003 for a bank statement borrower, please.
Absolutely right. So on the front end stage, when as account executives, when we're doing the pre-approval, we're looking for that 1003 to be as thorough as possible. For the most part, the 1003 is going to be the same way you would take it for a conventional loan, with the exception of the employment and the income sections, which we'll go into. But obviously, we want to see the 2-year history of the borrower's primary housing history. So we want to make sure we complete that. And then going into the employment section, we want to be specific in the employment section as to what the borrower does for a living. So, the easiest example is going to be a business owner. Obviously, for a business owner, you would list the name of the business, how many years they've owned that business, and of course, what percentage of that business they own. Where that could differ is a lot of times nowadays, especially, we see borrowers who are 1099, borrowers who might be Schedule C, borrowers who might basically freelance a little bit. So those types of borrowers, that's where it starts to get a little bit tricky on the 1003. And what we want to do is we want to be as specific as possible. So let's take the example of a borrower that maybe is 1099. Let's say you have a truck driver and he happens to drive for 2 or 3 different companies. So when we look at his bank statements, we're going to see deposits coming in from those 3 different companies. What we're going to want to do is we're going to want to list each one of those companies as an employer on the 1003, so that when we as account executives are reviewing those bank statements, we can say, okay, we can correlate this deposit to an employer that's listed on the application and obviously count that as income. Now, very important, and probably the most important piece on the 1003 for a bank statement program is the income section. On the income section, because this is unlike conventional, as Annie mentioned, throw away those tax returns. We don't want to see them, burn them, right? So we don't know what the income is yet at the time that the application is coming to us for a pre-approval, because we haven't calculated your bank statements yet. So what we're going to ask you to do is either leave it blank completely, or if your LOS requires some sort of a digit to be put in there, you can put 0 or you can put $1. But again, since we don't know what the income is at that particular point in time, it's important that you send us the 1003 for the pre-approval with a blank $1 or 0. Once we get past the employment section, then after that, it's going to pretty much be like you would on any other 1003. Complete your REO, your real estate owned. We do pull a fraud guard on all loans that come in the door. So if there's any properties that the borrower owns, they're going to pop up on there. So we'd like to know about them up front. Make sure you complete that for us. Obviously, all of the subject property information, including the loan details form showing the taxes, insurance, and HOA, so that when we calculate the income and we do a pre-approval, we make sure we're calculating your ratios properly.
Yeah, I mean, guys, yes, this is being recorded. We will get this recorded out before end of day tomorrow. So thank you. A lot of questions still coming in. She's working on 3 of these loans right now. So congratulations, Jackie. And then Angelo asked a quick question. We're going to get to what Annie wants to see from a credit reports perspective. Angelo, I just want to make sure anything that's over an 80% LTV, there is no mortgage insurance. So just want to be clear on that. Annie, take us through what we want to look for on a credit report, and the number of trade lines and kind of credit depth, please.
Perfect. So what we need to see on the borrower's credit report for qualifying trade lines is we need to see either 3 trade lines that have been open and active for 12 months or 2 at 24 months. So they can actually be closed as long as we have had activity in the past 12 months, that we can still use that trade line. So when it comes to the mortgage history, we actually do allow 1 late. So that's actually pretty good, especially if you're working on a jumbo purchase where guidelines are very strict. This program, if they have that late, we're okay with that. Now we can have no 60-day lates, no consumer 60-day lates over the past 12 months. So no credit card, auto payment, no late like that, and then no collections or charge-offs within the past 24 months. And so the way that we're going to qualify the borrower is going to be the middle credit score. If we do have two borrowers, borrower and co-borrower, then we're automatically going to use the lower of the two. Now, let's say we do have two borrowers, one's W-2, one is self-employed, and we can determine the primary wage earner. Then we will go ahead and use the credit score off of that primary wage earner. So, but it's pretty simple. Usually a lot of these borrowers are coming in with credit scores above a 700. You don't see a whole lot of blemishes. All these credit reports, this is entirely income-based. So you have very strong credit borrowers on this program.
Yeah, Annie's spot on with that. Our average LTV is about 73%, credit scores in the 730s plus, and debt to income ratios in the 30s. So, and Annie mentioned this when she was going over the highlights. She talked about having that borrower qualify usually for a bit more purchasing power for that borrower. It's not your W-2 borrower buying those luxury homes. It is truly your self-employed borrower. So, Scott, Annie started to touch on a W-2 borrower along with a self-employed borrower. Kind of jump into that a little bit. How do we look at that? She talked about the credit score that we'll use, but what if you do have, it's a question we always get, and we've already got a couple questions for that. What do you do if you have a self-employed borrower and a W-2 borrower?
We like to call them the hybrid, right? But one of the beauties of the bank statement program is just how versatile it is, in the sense that you can use these different sources of income. So let's take one example. Let's say we have a couple and one of them is self-employed, owns their own business. One of them is a straight W-2. For the self-employed borrower, we're going to do the income calculation on their business or personal bank statements, depending on which one they want to use. And we can take that income and combine it with the W-2 income from the other spouse. Now, obviously, we're not asking for tax returns on the bank statement program, so same applies here. We're not going to look at the returns. You can burn them. We're just going to ask for the last 2 years W-2s and the last 2 pay stubs. And that's how we're going to determine the income for the W-2 borrower and combine the two. And as Annie mentioned, the cool thing about the program, cool feature, is that you're going to be able to use the primary wage earner's credit score to qualify in that event. Now, there's been some examples, we've seen some of these, John, where, especially nowadays, where you have a lot of these gig type workers, and what they're doing is they may have a W-2 position and a W-2 job and W-2 income coming in consistently for 2 years. But in addition to that, maybe they run an online store. Maybe they have a website that generates revenue or income. They have some sort of a business or entity set up. In those situations, we can also combine the 2 incomes, both the W-2 income and the self-employed income from the bank statements, for one borrower. So like I said, there's a lot of versatility with the program. It's not just bank statement only or W-2 only. We can combine those incomes together. So guys, if you're ever working on any of those situations, or maybe sometimes you're looking at bank statements and you're a little bit short, keep in mind, we can bring in that other borrower and we can combine those 2 incomes to qualify.
Yes, guys, it's funny. I was watching Shark Tank last night. That's how everyone starts their business, right? They've got their W-2 job and they start their side hustle. It's crazy. So Andy, we talked about bank statements. Who's calculating? How are we calculating? Give us some information on that.
Oh, wonderful question, John. So when you start your bank statement loan, you're going to reach out to your local account executive, and they're going to work one-on-one with you during the pre-qual phase. So I get this question all the time, and I understand a lot of you guys haven't done a bank statement loan, and a lot of it is just because everybody's fearful. How are these going to calculate? How am I going to know we have the right income? How do I know it's going to go smooth for underwriting? So we are bank statement experts. So you will send those bank statements directly over to your account executive. Inside, we have our own bank statement review team. So they are going to review those bank statements and they are going to clear them. So that way, when your account executive issues that pre-qual, those bank statements have already been cleared, and that income, that number that we are giving you, is going to be the income that is going to go through underwriting and is going to close that loan. So that way you can have the trust and the confidence after it's been reviewed by your AE, that loan is going to come in and that income is not going to change on that loan.
I want to repeat what Annie just said. That's the income that's going to be used throughout the entire process. And there's always questions about, hey, TBD. Yes, we will do a pre-qual TBD, and And we've been encouraging a lot of people over the last years that if you know you're an originator and you are meeting with a self-employed borrower, yes, grab their tax returns, but at the same time, grab their bank statements, because there's two things are gonna happen. When you finally get their tax returns, they're under contract, everyone's on fire, and now they don't qualify for the house that we thought they said because they told you this is what they made. So get their self-employed, and then it's up to them on what type of house they want to buy. Do they want to stick with that $300,000 house maybe Annie mentioned earlier, or do they want that $750,000 home using bank statements? So, do yourself a big favor when you know you're meeting with that self-employed borrower, get both tax returns and bank statements. We can do a TBD for your pre-qual. So that's my public service announcement right there. So anyway, so Scotty, we have a question here from Scott. How do you calculate the start date? Pretty basic question, but let's tell Scott, what do we use for the start date, or how do we prove their self-employment?
Yeah, so if it's a business, it's very simple. We're just going to go to the Division of Corporations website for that particular state, and we're going to pull up the business and just see the incorporation date. So that's typically how we're going to verify that. Your account executive is usually always going to do that when you initiate contact with them and they're reviewing your file. That's usually the first things we do. Go to the Secretary of State, pull up the business. Are we open for 2 years? Yes, we are. Okay, let's move on to the next step. In the event of a 1099, sole proprietor, S Corp, Schedule C, those we're going to verify via an accountant letter. The letter can actually come from an accountant, a CPA, or a tax preparer, but we are going to ask for that letter, and that letter needs to verify that they can confirm this borrower has been filing as a sole prop, Schedule C, whatever the case may be, for X amount of years, and of course the minimum is 2 years.
Yeah, thanks, Scotty. You touched on something I want Andy to talk a little bit more in depth on: expense ratio. How are we figuring this out? What are some of the parameters? Give some high level, I know we default to a 50%, but give us some other examples, Annie, please.
Oh, perfect. So for example, I had a deal that I just closed, came in and they owned 2 different retail stores. And so I think they were like natural supplement type stores. So they had 2 different retail locations, and then they had about 15 employees. So with having the 2 different retail locations, the higher number of employees, we use the 70% expense factor because they're also carrying overhead as well. So then we use the higher expense factor. And then I did another one. We're working, the borrower was an attorney, worked from home. It was just him. So overhead costs were very low. So we were able to get a CPA expense letter that said that he did not make more, or the expenses were not more than 30%. So we were able to use a lower expense ratio on that. So it really does come into play. That's why the business questionnaire is so crucial to have completed correctly during your pre-qual phase, because we do review that information, and we do use that to determine the final expense ratio. And having that CPA letter for the small business can give us definitely more income.
Yeah, and it's really important that you know that expense ratio, because that's what we're using. Like, we'll calculate the bank statements for you, but that's the critical part of knowing what of the bank statement income we can use. So, and again, we understand how important your referral relationships are. So getting a lot of that up front, it may seem a little tedious, but it's really not. But it's really to help protect you, your referral relationship, and that borrower. So, Scott, a couple other questions coming in. You mentioned, Scott, on the 1003 about the schedule of real estate. Do we basically, do we limit how many loans or how many pieces of real estate the borrower? I'm having a hard time saying it. I don't know why, Scott, but is there any limitations, I guess, on the amount of real estate a borrower can own?
No, that's a great question. These loans, we're strictly underwriting the subject property. The borrower could own, there could be an investor maybe purchasing an investment property using the bank statement program. If that borrower owns 10 other investment properties, we're okay with that. We're just focused on the subject property on this program.
Yeah, so Denise, hopefully that helps that question for you. Angelo asked a question, and the business questionnaire, it's really not, it's about 6 questions. So it's really easy to fill out. So just want to make sure everyone knows, again, it's not an arduous task. It's really short and sweet and hits the point, and we're going to get it done for you. Annie, tell them what our turnaround times are to get a pre-qual done for a bank statement borrower.
Perfect. Well, turnaround times are actually very quick with us. So we need at least 24, 48 hours. You know, the review team usually gets them done within 24 hours after we send them over. So I tell all my loan officers, you know, it's going to be a 24, 48 hour. And then it also comes down to if we need additional information. You know, lots of times we jump into these loans and we need to go back to the borrower and ask for more information. So then it also is dependent on how fast can you get that information back to us. But expect to have a 24, 48 hour turn time within the pre-qual.
Right. Scott, question comes in. What if and Annie mentioned it earlier, what if the person has two separate businesses? Scotty, how do we handle that?
Yeah, great question. So, and again, speaks to the versatility of the program. If you have a borrower that owns two completely separate individual businesses, we can use the income from each one of those businesses to qualify. So we can use business bank statements from business one, business bank statements from business two. We'll run the income calculation, obviously apply the appropriate expense ratios, and we can use both incomes to qualify that borrower. And it's, you know, taking a step back, John, if I can make a point on, we touched base on the expense ratio, we touched base on the business questionnaire, and he explained how we run the income for you guys up front at the pre-approval stage. There's so much value there. And to put it into perspective, if you look at it this way, is when you get a pre-approval from an account executive at Angel Oak, we've already looked at the bank statements. We've sent them to our income team to calculate them. We've already looked at the business questionnaire. So we have an idea of how many employees does this business have? How many locations does this business have? What field are they in? So we can apply the appropriate expense ratio. You know, by default, we use that 50% expense ratio. And I forget what the number is, John, but I think it's probably a large majority of our loans qualify at the 50% ratio. But in the event we need to go lower, we can address that up front. The point I'm getting at is that when you get a pre-approval from us, it's solid. You can literally send your buyer out shopping to go look at properties and go make offers, knowing their true buying power that's been underwritten. You know, as everybody on this call probably knows, if you're doing a full doc self-employed loan, you can send a set of tax returns to 4 different underwriters and get 4 completely different incomes, right? You are eliminating that through the bank statement program, because before the loan even gets to underwriting, you know what your income is. You know how much buying power you have, and you can send your buyer out confidently shopping.
Yeah, Scott, that's huge. And David's asking a question, and I'll answer David. So, you know, there's a couple of the questions regarding expense ratio. We can go down to as low as a 15%, right? But, you know, it's going to have to be, as Annie mentioned, maybe it's someone working from an IT person working from home, very, very little overhead. Or, we'll go as high as a 70% expense ratio. Maybe it's someone with a very high overhead expenses and a lot of inventory carry. So, David, so if we're using a 70% expense ratio, your scenario is spot on here. If they have $10,000 in deposits, and if they are, very rarely will we have a 70% expense ratio, but yes, we're only going to use that $3,000 a month as income. So hopefully that clarifies that, David, but it's really for very, large overhead, high inventory cost companies. Like you said, most cases it's 50%, and Scott, you were going there. I think it's probably 60 to 70% of the loans we close probably fit into that 50% category. So just hopefully that helps out there. Annie, I'll go back to you. You mentioned, about the credit you talked about. Carlos is asking, you mentioned no collection judgments in the last 12 months. Give us some little clarification on that, and where we might be able to get around it, if it's, maybe medical, right? Let's talk about that.
Oh yeah, no, great question. So yeah, if it's medical, we don't even look at medical. So that is 100% ignored. And for collections, we go off the date it was opened. So even if they've gone in, maybe they paid some of it off and it bumps that date of last activity up, that is not going to bump it into that 2-year range. So if it's a collection opened 4 years ago, they go in, they do something, date of the last activities, like maybe a year ago, it's not going to throw that into the 2-year category. So it's based off of the year open. So yeah, it's pretty black and white when it comes to the collections of that.
Yeah, great question, great answer, Annie. Thank you. Pitt is asking, what's the rate? Pitt, we're going to, and I probably should have done a better job up front telling you what we're going to cover in addition to a deep dive into the product. We're also going to tell you how you can get rates quoted 24/7, how to submit a pre-qual, and then we're really, probably most importantly, is how you can really use your marketing, the marketing portal that we have to grow your business. This is being recorded. We will get this out before end of day tomorrow. If we don't get to your specific question, your account executive will reach out to you before end of day tomorrow and get that question answered for you. So, so Scott, we talk about, Laura's already asking about a generic PowerPoint for realtors. We're gonna get there. I promise you. You're gonna see me come out of my jacket here by then. I can tell you that. So. Yeah, so we'll go over the LTVs. You know what, Annie, do me a favor, go over the LTVs where we are. You started mentioning loan amounts and some LTVs there. And things are always changing here quickly. I'll tell you by January 1st, there'll be more enhancements. So, stay tuned. But Annie, if you need to grab your matrix because things are changing, feel free. Give us, what the lowest credit score we'll use, and then what that correlating LTV, and then up the ladder of LTVs, if you don't mind.
Okay, perfect. So yeah. So before I jump into that, I just want everybody to know what John just mentioned is we do a lot of guideline changes. So it's been a volatile market. Guidelines are changing rapidly. So definitely, if you're not following Angel Oak Mortgage Solutions on LinkedIn, definitely go ahead, give us a follow. Our marketing team's always updating our LinkedIn page. And also, if you're not getting our weekly emails, if you've opted out from the emails, then go ahead, opt back in. That's another great resource. We're always doing emails every Tuesday that are updating our guidelines. So now jumping into the credit. So these loans starts at a 660 and we go up to a 75% LTV at a 660. With a 680, we will go up to 80% LTV. With a 720, it'll be 85%. And then with a 740, we'll go up to 90%. And then as we stated, the minute we go over 80% LTV, there is no MI whatsoever. And then we're going to jump into Quick Quote here really quickly. And this is a great tool. You all have access to this tool. You don't have to log in. And so that way, when you're pricing out scenarios and you're running through scenarios, you can easily check on that, what credit scores and what LTV they qualify for with that. And we'll show you how to do that here.
Hey, Scotty. Thank you, Annie. Scott, Jason's asking a really good question. What's the benefit of doing a bank statement loan versus a DSCR loan? He's diving deep here.
Well, yeah, a great question. So investment property, right? And you're looking at, should I go DSCR? Should I go bank statement program? It's going to depend on the borrower. Let's look at from a pricing standpoint. From a pricing standpoint, typically the bank statement program is going to price a little bit better than your DSCR. There might be certain differences in guidelines. For example, if it's a multi-unit property, you're going to get a higher LTV, up to 75 LTV on the DSCR versus the bank statement loan where you're going to get capped at 70%. But I think the most important one would be if this is an investor that owns multiple properties and you may or may not need the income from those investment properties to qualify. Sometimes that can get a little bit more difficult on the bank statement side because we have to make sure that the income from the bank statements is enough to cover not only the subject payment, but all of the other investment properties. If it's not, then we have to start getting some leases and we have to show evidence that the rental income is going into a different bank account. So it can get a little bit difficult. And at that point, we might just pivot to the DSCR program because on the DSCR, while you're going to list your REO, there's no verification on what the payments are or anything like that. There's no documentation. If the mortgage history for those properties is on credit, that's all we're really looking for. So that's pretty much going to be where you would look at the two programs and make a decision. And of course, your account executive will always help you with that. Another pretty cool feature of both programs, since we're on that topic, is that if you submit a loan, let's say an investment property bank statement loan, and for whatever reason in process, something pops up, we can pivot and just do a change of circumstance to the debt service ratio program and vice versa.
Yeah. Great point, Scott. And that is the key about really get into a really strong relationship with your account executive, because they are going to steer you and your borrower down the best path for your borrower. So there's no ulterior motives here. It's what's going to be best for your borrower. And I'm going to put a shameless plug in for next week's deep dive. Is our DSCR deep product dive is next Thursday, same time. So hopefully you can join us for that. Everyone will be getting that that email if you signed up for all three. Sorry about that. Easy question here, Annie, but it makes sense. And I know you're going to say 12, so don't be a smart aleck. What's the difference between doing 24 months and 12 months?
You know, the difference is 100% pricing. So in the past, we've had different pricing models depending on the bank statements that we're using. Right now, it's the same pricing for 12 to 24 months. So I'm just having everybody give me 12 months. So it's 100% pricing. And then also to note, you know, to piggyback on Scott's wonderful answer to the DSCR versus bank statement question, especially in this marketplace where rates have gone up and it is hard to qualify some of these loans on the DSCR program, especially some of these purchase loans, is I have been able to be very successful in putting them into bank statement loans. So a lot of these DSCR borrowers are self-employed. It's just easier to do the DSCR route. But what we will do is on that subject property is we will use the market rate to help offset that. So I closed one last month where we were in there right at 48%. There was no way I was going to work on the DSCR program. The borrower was self-employed, and we still got them into that home. So adding to, you know, Scott's current responses, yep, it's a very flexible program. It's a very flexible program. You know, we can be very creative with our programs. So that's a lot of fun doing these loans.
And when you have subject matter experts like this all across the country, I'm telling you, you guys are in great hands. Denise is asking, and I'll answer this one. Denise, yes, they have to be consecutive, you know, the bank statements. We want, you know, the last 12 months. And the other reason why you know, it's easy. We're calculating the bank statements for you. So getting us 24 is just going to be having to ask the borrower for 24 months, but because we're calculating it for you. So it's no additional work on you or the borrowers, and we're going to tell you which way to go. If it makes sense, let's just say they just started their business 2 years ago and the last 12 months have been really, really good. We're going to say drop the first 12 months, right? Or drop months 13 through 24, and let's use 1 through 12, and we'll be able to qualify with more income there. So, Scott, a couple other questions. We talked about transactions, purchase, cash out. Cash out is becoming almost 30% of the loans we close today are cash out. You have self-employed borrowers wanting to tap that equity in their house. But Annie mentioned this earlier, Scott. Go into a little bit more in depth about delayed financing, because it's not as hot as it used to be, but it's still a viable transaction, correct?
Yeah, absolutely. We're still seeing a good trickle of them. And I think in the hotter markets, you'll see it as well, where there are properties out there, good opportunities from an investment standpoint. And a lot of times you'll see people that are interested in just jumping on that property. They're still using cash to purchase it, or they may use private money or hard money loans. We can do a delayed finance transaction on either one of those using the bank statement income to qualify for the transaction. So if the borrower purchased the property in cash, or if they used hard money, we can come in basically 1 day after closing, qualify them using the bank statements, and allow them to recuperate part of the cash that they used to purchase the property. Or if they used hard money, we can allow them pay off the hard money lender, and in some cases recuperate some of their down payment. What's cool is that we underwrite that to a purchase guideline. So it's not going to be subject to your LTV caps on cash out. So if the borrower qualified, let's say, purchase cash, and the borrower qualifies for 90% LTV, it's a primary residence, we can go back up to 90% LTV on the delayed finance transaction.
Yeah, and Grace, we're going to cover Florida National next week when we cover DSCR, just so you know that. Annie, talk a little bit more about 1099, qualifying that borrower for 1099 purposes, and this time of year being probably almost the best time of year if someone is doing a 1099.
Yeah, definitely. So we do see, you'll run into borrowers out there where maybe they're an insurance agent or they're in a sales position, and even a lot of realtors. So any borrower that is paid 1099, we also have a 1099 option. So most of them are going to have only personal statements, so we can review their personal statements, or we can gather their 1099 from either 2021 or 2020, and then we will review those 1099s. Now, we will also apply an expense ratio because technically they are self-employed. So we do want to be mindful of those expenses. Now, a lot of these guys do come in less than 50%. So they do need to work with the CPA to establish what that expense ratio is and what we can go down to, because the floor is 15%. So, but yeah, 1099 borrowers. So definitely starting January, February, March of next year,
Yeah,
it's going to be a great time. You don't have to collect the bank statements. Just get those 1 or 2 year 1099s, and it's a very easy loan to do.
Yep.
Yeah, Jackie's asking about exceptions. Yes, we do exceptions. Almost 30% of our loans are closed via exceptions, right, with exceptions on them. But again, having that full story, we have AEs. I love the saying that they use. Our AEs are basically your confessional booth. Give us all the information up front, and we're motivated to close a loan that makes sense for you and your borrower. So yes, exceptions are granted. Sorry about that. We'll spend a couple more minutes here. Yes, we can close investment properties, primary, second homes. We do a lot of second homes down in the Florida area, right?
Oh yeah.
And let me get a couple last minute questions. Someone brought up here, Scott, maybe you can give them a tip or trick regarding, the CPA. Some CPAs are hesitant, to provide that letter if it's less than a 50% expense ratio. What are some of the other things that you get, from maybe bookkeepers or stuff like that? Maybe if you could expand on that.
Right. So as we mentioned, the letter can come from the CPA, it can come from an accountant, it can come from a tax preparer. So keep that in mind as well. Don't necessarily have to go straight to a CPA. In the event that you're having a hard time getting that letter, if you need an expense ratio on it, we have in some cases taken the letter from the attorney, the borrower's attorney or the business's attorney. So there's an option there as well. Sometimes we've had some borrowers that self-prepare taxes, and maybe they didn't have the ability to go to an accountant, tax preparer, CPA. So what we tell them to do is they can take their taxes down to a local tax place, H&R Block, et cetera, have them reviewed, and they can put the letter together for them. So there's definitely a lot of options there, and your account executive will work with you on it.
Yeah, I still a lot of questions. Like I said, this is being recorded. If we didn't get to your question, your account executive will reach out. There's been a lot of questions about rates. How do I get your pre-qual? So Scott, let's take us through it. And I'm going to go back to the home page, Scott, so we can show, how to get a quick quote, if you don't mind taking me through the process.
Absolutely. So this is our home page, angeloakms.com. I highly recommend everybody bookmark it, because anything you need to know, including everything we just covered, is right here on the website. So for the pricing engine, you guys will notice in the middle of the page there, the non-QM quick quote. That's where you're going to go in to get pricing on all of our non-QM products and programs, bank statements, DSCR, non-QM full doc, asset qualifier, et cetera. So when you click on that, you're going to come here to your quick qual page. And the first thing you're going to do is select your channel type. For the most part, you're going to be a broker. Non-delegated obviously is going to be on the correspondent side. 99% of the time you're looking at broker. From there, you're going to start to just input the information about the loan. Now, as John goes through this and starts inputting fields here, keep in mind, we did not have to enter credentials to enter into the quick quote, okay? You do not need credentials to access this. This is available to anybody. So if you have a buyer, potential buyer on the line, you're talking to them or they're in front of you, you could always hop right on here and start playing with the different scenarios to be able to price out a loan. So John entered here a 740 to 759 credit score, 600,000 loan amount, 75% LTV, single family purchase using the 24 months bank statement program on a primary. And as you can see under rates and programs, it's going to show you the LTV you requested, 75%. It also gives you a note that the max LTV you can go to with this credit score is 90. And then the pricing, 8.625, you see the rate there, which is based on the compensation type above, borrower paid compensation. Okay. Couple other notes there. Yep, there you go. Couple other notes there in terms of bankruptcy seasoning, housing event seasoning, just some underwriting notes. Tells you 6 months reserves are required, and it's quoting you on a 30-day lock. Now, if you wanted to see the full grid, the full table of pricing, you said, okay, I want to see what the rate looks like if my buyer pays a few points to buy the rate down. Or maybe on the flip side, what you would do is click view rates, and you're going to see the entire box here pop up with your full pricing grid, just like you guys would see on a conventional loan. So at 100 pricing par, you're at 8.625. In this particular case, if we went up to say 100.5 pricing, 8.875, that's paying your borrower back a credit of $3,000. And then on the flip side, you have your buy downs. If you go to 99.5 pricing, 8.375 rate, that would cost your borrower $3,000. So assuming this looks good, you're going to select 8.375 the way John did, and you decide, all right, I want to proceed and move forward. You're going to click on the select option, and that's going to take you to page 2. Page 2 here would be for your 3.4 file. So if you have a 3.4 file completed, you can literally just drag and drop it in here. If you don't, no worries, just hit the next button. And in page number 3, you're going to be able to input all of your personal information. Obviously, select your account executive first, put in your company name, your name, NMLS ID number, phone, email, borrower name, etc. But more importantly, down here at the bottom, you'll notice these boxes where you're going to be able to drag and drop the PDF version of your 1003, your credit report, 1008, the transmittal summary, if you have it. If, as you notice there for the 1008, there is not a red asterisk next to it, so it's not required. The business questionnaire, you can upload here. So guys, when you're doing this, if you click on that blue button, you can actually download a copy of the questionnaire right then and there and get it over to your borrower. But it's not needed at this stage. We don't need it to issue a pre-approval or for you to submit a pre-approval. And then lastly, in the bank statements box, you can drag and drop your bank statements. Now, cool feature here, you can literally highlight, control highlight 100 different PDF attachments, and in one drag, drop them right into this box. They'll populate quickly, and then you'll just scroll down at the bottom, answer a couple of last questions we have there regarding credit history. Is there any BKs? When was it discharged? Have there been any housing events? Once you answer those, you hit that submit button, and now that submits that pre-approval directly to your account executive. So let's say it's going straight into Annie. Annie's going to get a notification instantly on her email, new pre-approval submitted, new pre-qual submitted for such and such loan officer and borrower. And we can now jump on those and start sending them up to have the income calculated, working on those pre-approvals, getting them back to you in usually a 24 to 48 hour time frame.
Yeah, and I want to reiterate, we have a team of experts. That's all they do is calculate bank statements. So, like Scott said and Annie's mentioned, anywhere from 24 to 48 hours, depending upon if there's something missing, maybe a month's missing, maybe a couple months are missing. So, but it's pretty easy, as you can see, Scott. Doing a quick quote is a pretty easy. There's like 7 pieces of information that we're requesting from you to get a rate quote, dynamically. 24/7. Anything to add to the quick quote or the quick qual process?
So, Scott did such a tremendous job explaining everything. So, the biggest thing, especially what Scott talked about earlier, is a thorough 1003. I can't state how many times I have to go back and ask questions because there's information off of the 1003. And even as we've been speaking of, that these loans are very flexible. Maybe we can't qualify it under one loan, but we see other information where we go, oh, we can qualify off of this loan. So I can't complete 1003 will help this pre-qual go so smooth, especially what John said earlier. This is your circle of trust. Your AE is your circle of trust. Tell us everything up front. I always tell my brokers, I do not need to find out new information after this loan has gone into underwriting. Do not land me in underwriter court, because then I have to build a case and I have to dig us out. And sometimes it is not easy. So please complete 1003, circle of trust.
Yep.
Great,
Love it.
great point, Andy. We're not underwriters, we're account executives, but we know our guidelines. So
Yep.
No, I mean, I'm glad you said that, Scotty. Basically, this is and Andy mentioned it earlier, this is a pre-underwrite, right? This is getting your income up front, reviewing your 1003, making sure it's buttoned up, and your credit report. They're going through and looking at it, better than 90% of the underwriters in the world, right? These account executives know their guidelines. Scott's been here 7 years, Andy 7. They know the appetite for Angel Oak and the loans that Angel Oak wants to close. So take advantage of them.
I always like to say that the pre-approval you get back from Andy or myself, that is your version of a DU or an LP, eligible accept or approved eligible. Really, we've done that same work reviewing that file completely, especially in the case of the bank statement loan, because as we mentioned earlier, the income's calculated already. So we know what we have going into it. But yeah, as far as the quick qual screen, guys, no credentials needed. You saw how quickly and easily we were able to go through that literally within a matter of a minute and submit a pre-approval. So you definitely want to bookmark it, get it there on your favorites so you can access it quickly, and you can literally pull up pricing at any moment whenever you have a non-QM deal come across your desk.
Yeah, no login credentials either, but we're going to go into a section of our website right now that does require login credentials. So Andy, take me through, let's go back to the homepage so everyone knows where, again, it is. So take me through how we're going to help everyone on this call grow their business and use their account executives to help them educate their referral source.
Perfect. Okay, so this is one of my favorite things to talk about because I've worked and partnered with a lot of brokers, and I have seen their business expand right by time at Angel Oak. So the first place, let's actually go down the application package, because if you're on this call and you do not have logins or IDs, if you go click on the application package tab, there is the request for user ID and passwords. Click on that, fill that out, email that in to us, and within 24 hours, we're going to get you issued those IDs and passwords so that way you can go into the portal and have access to the information that I'm going to bring up here. So John, I know before we jump into
I'm going to do another public service announcement, right? Yep. Don't wait until you have a loan to get this, yep. Right? Don't yep. wait. I promise you, get it done up front. It doesn't cost you anything. Get it done up front. Sorry, Eddie.
Perfect, yes. No problem. So before we jump into the marketing, let's bring up that PowerPoint you have, John, about where to find these borrowers. Because that's such a great PowerPoint to send us off to talk about all the marketing resources we have for them.
Yeah, I'm going to try and here we go. Let me switch sharing this screen here for a minute. Bear with me, everyone. Okay.
So while John brings that up, so marketing, I can't talk enough about marketing. So I have worked with a lot of loan officers, and they have found a lot of success marketing online. So, way back in the beginning, before there was a lot of social media, they would do a lot of email marketing. Now it's evolved. So a lot of my very successful LOs now do a lot of online marketing. They will go to Instagram. They will go to LinkedIn. They have amazing networks. They are LinkedIn with, real estate agents, CPAs, asset managers. Anybody that can potentially touch these types of borrowers, they have huge networks of them online. And so not only are they posting when we have guideline changes in the sense of, their posts are, were you turned down? I can work with self-employed borrowers. I can go up to a 3 million loan amount, 80% LTV. I can do a 2 million loan amount up to 90% LTV. So they're actively marketing all this information across their channels. And at the same time, they're also posting about the stories that sell. So anytime they close a non-QM loan, they're giving the details of the transaction. So they're saying, why the borrower couldn't qualify on the conventional route, how they were able to come in, and how we qualified them and close that. And they're posting at least every week, sometimes a couple of times a week. They're always staying up in that network, and they get a lot of referrals. So, this is a great slide. It's just a really good idea how to start building that network. I have brokers that join small business associations, and they just start networking with business owners, just talking with people, salon owners, CPAs, consultants, accountants, they're out there and they're across the board. So let's go ahead.
I would say anyone on this call probably works with people in industries, let alone obviously the realtors, but, you know, Scott mentioned transportation and trucking. You know, these are realtors are 9% of the loans we close on our bank statement program. Realtors account for almost 9% of that. So, you know, I always say you get, well, I'll let Annie go into this. Sorry, Annie.
Yeah. Okay, well, let's go ahead and sign into the portal so that way we can show everybody the resources that we have.
Let me get back to sharing the right screen here, Annie. Sorry.
No worries.
There you go.
Perfect. So we have a variety of resources at your fingertips once you get access to the portal. So we'll go ahead and sign in. And then what we'll do is we'll take you guys over to the marketing tab. We're going to jump into some flyers and then show you some social media stuff. And then we'll jump into the realtor presentations, which ultimately are some of my most favorite and very powerful for you. So here's the flyers. So we have flyers that are designed across the board for all of our programs. So these are simple, easy to use. All you do is you fill out your information on the left-hand side. You can upload a picture, you can upload your company logo, and then you just go ahead and say update, and then it'll update this flyer to your personal information. So you can go ahead, you can download this, you can use it in email campaigns, you can use it if you're, you know, going out saying hi to realtors. You can go out, drop them off at realtors and say, hey, I'm an expert in these programs. So these are very handy for you. So let's go ahead and let's take a look at some of the social media postings that we have. So yeah, so if you want to start posting on social media, we do have these pre-branded. And so I have some brokers that use these, other brokers that will just, you know, they also do a lot of videos. But these are ready to go if you just download them, and you can post them on your social media postings saying that you specialize in these programs as well. So now I want to jump into one of my—
Hey, Annie, one thing, I do like what you said earlier, and I want to just, you know, emphasize that. Like, if you do close a loan, I know 70% of you have not closed a non-QM bank statement loan in the last 12 months, but for the 27% that did, you really start posting this. That's, Annie mentioned that, and I just want to emphasize, these are not hard to get done loans, but self-employed people hang out with self-employed people.
Yep.
And they will tell friends, and you're just getting the added exposure doing that. Sorry, Annie.
Oh yeah, no, but I love that story, John, because I mean, this is just, you know, when I first got in the business, I was working with a broker, and she did a loan for a self-employed borrower. And by the time this borrower reached her, they had been declined like 5 times. And so she did their loan, and then you know, self-employed, they own a business, they have employees. So he was so impressed with her ability to work with him after so many people had told him no. He, I think at least 5 referrals she got, and those referrals were easy peasy, conventional, easy peasy loans. And so, and that's the thing, if you take the time to learn these programs, work with these borrowers, they will give you referrals. They will go out there and they will talk, and they will become your little personal marketing. A lot of my brokers, we get repeated business. A lot of my brokers will reach out, oh, this is a referral from so-and-so. We did his loan last month, or we did their loan 2 months ago. So they really do talk. So let's go back to the marketing portal and let's hit up our realtor presentations. Now, this is one of my funnest things to do. So this is really where Angel Oak, we believe in the power of having local representation, and we want to partner with you, especially right now. You know, loans are tight. Every loan counts. So let's get in front of those real estate agents and let's show them, you know, don't say no to any type of loan out there. It's we'll go ahead, we'll get a short one just downloaded, but this PowerPoint presentation that you can download off the website just goes through all the highlights of non-QM. But really where the power is us as AEs, we will come in and we will do this presentation with you. So whether it be in person or whether you're doing, you know, an online Zoom meeting, we will come in and we will be your subject matter experts. And we all know stories sell. So we will tell the stories. We will tell about how these loans closed, how we work with the borrowers. They close, yes, less than 30 days. So let us be that expert and build that trust and confidence. So that way, when that real estate agent comes across that potential borrower, and maybe they hear them say something like, oh, I might have dinged up credit. Oh, we went through a hardship. You know, I lost a home a couple years ago. Or, oh, I've already talked to somebody and we're self-employed. We had a hard time qualifying. That real estate agent has the confidence to say, no, call so-and-so at here and work with them. We're going to get you pre-approved. They work with borrowers such as yourself who may have a more difficult time qualifying, especially right now. I was out in the field yesterday, and it's every single lead needs to be utilized at this point, and this is really how it's going to help you utilize them with the realtors, is allowing us to come in and be your subject matter experts for you.
Yep. Yeah, Annie, it was just 2 weeks ago here in Dallas, and I always use this statistic, and it's getting even a higher turnover, a higher percentage of conversion. You get, 9% of the loans we close are realtor loans, right? So if you get 12, 13 realtors in a room, the odds are you're going to get one of their loans, right? Do the math. Well, Tuesday, 2 weeks ago here in Dallas, we did a realtor presentation on behalf of a loan officer, and there were 7 to 8 realtors in the room, and we still got one of the realtor's loans. So before Thursday, so that was on a Tuesday. On Thursday, we got that realtor's loan. So it's a powerful presentation. Scott does a ton of them. Our AEs across the country, like Annie says, they'll do them in person or they'll do them via Zoom. It's extremely, extremely powerful. And Annie mentioned this too, whether we like it or not, that referral source, those realtors pre-screen your buyer, our borrowers, right? They pre-screen them. And if they tell them, hey, I only make $50,000 on my tax returns, or I have a credit event, no, we are going to educate your referral source on your behalf and do it. I mean, now's a great time because they're all going to these holiday parties, right? They're going to be in these conversations. Hallelujah. It's a great time to educate your referral source. So, Scott, I know you do a lot of these. Anything else to add regarding these realtor presentations?
Yeah, add a little bit. Annie did a phenomenal job covering it. I mean, as account executives, we love doing them. Like she said, it's one of the funner parts of the job because we like being able to go out on your behalf as the loan officer, as the originator, and make you look good presenting these products and programs. John, you mentioned it. In my opinion, and I've done a lot of them just in the last 2 months, there's no better time than now to start doing these because realtors are hungry for information. We all know businesses slow down. They don't see anywhere near as many deals coming across their desk. So they're hungry for the information of that one product or program that might help them land 2, 3, 4, 5 more deals throughout the course of the month or the year. And what we see, and I'm sure Annie can attest to this, is when we start speaking about these products and programs to realtors, just like we had, 60% of the people on this call hadn't closed a bank statement loan. Take that even further with realtors. Most of them are still not aware that these products and programs exist. And so their light bulbs start going off in their head. They start to realize they can buy a property using a bank statement loan or a 1099 program. And you just generate that interest. And of course, with that interest is going to come the conventional, the easy peasy loan. So you mentioned it, John. Now I think is one of the best times to start setting these up and bring them out there. And like you said, they are screening our borrowers. Yep. Before the borrower gets to the originator and before it gets to us at the wholesale level, the realtor is screening that buyer. So it's critical for everybody on this call that we're educating the realtor community about what's available to them.
Yep. So Scott, while you're on a roll, anything in closing that you want to add?
No, I think in closing, for those that have closed a bank statement program, a bank statement loan before, hopefully it closed with Angel Oak. I think you can attest and you know how easy these loans are to close. For those that haven't, I like saying that I think the bank statement program, the bank statement loan is an easier loan to close than a conventional loan. And the reason I think it's easier is because, as we mentioned earlier, we covered it already, your income is underwritten up front. There are no surprises when the loan gets to underwriting. There is not 10, 15, 20 different schedules on the tax returns that are going to be reviewed that could possibly, throw off your income calculation. And next thing you know, you have a debt ratio issue, right? None of that exists on the bank statement program. We're not looking at the tax returns. So I think personally, they're easier loans to close because at the pre-approval stage, you know your income, you know you're qualified, loan gets submitted to underwriting, flies right through, and we close these well inside of 30 days. In some cases, we've closed them as quickly as 7 days or even less.
Yeah. Thank you, Scotty. And Annie, anything else in closing?
Yeah, Scott did a fabulous job, especially allowing us to be your subject matter expert. I agree 100% with what he says. These are super easy loans to close. But, last thing I just want to say is we headed towards the holiday season. It's been such a volatile year in the mortgage business. And, I just want to thank all of our partners out there, everybody, for being so understanding and working together as we have gone through this marketplace. We've seen stuff we've never thought we would have seen and experienced things we never thought we would experience in this. And the only way that I have been able to get through it is, the wonderful loan officers that I work with and the wonderful peers and the family that we have in Angel Oak and how we have all stuck together. And I was having dinner with a colleague last night who's also in the business, and we were talking about how fortunate we are to get work in this business, because even though at times it's very hard, we get to build lifelong relationships. And we both had, worked in the tech sector where you don't have those relationships. And that's why we both came back into this business, is because of the relationships. And you build these long-term, I love the fact that my top brokers, I've been working with them now 7, 8 years. And, when we get together, it's like seeing an old friend. And so that's the most important thing as we head into the holiday season, is just being grateful. And we get to work in an industry where we're service. And, the conventional loans, those are easy peasy, and I understand at times it becomes a number. But when I have loan officers that call me and their borrowers are crying at the closing table because they never thought they would qualify for this home, that is what drives me and everybody at Angel Oak to do what we do, so that we can truly make a difference in these borrowers' lives. If that's what we do. We're in the service industry and we help people. And that's what drives all of us. So it's just the season, let's be grateful for what we have. Let's be, grateful for all of those around us. We survived this year in the mortgage business. And, let's get ready and go out and make a difference and change someone's life in 2023 and get them into that home of their dreams.
Yeah, very well said. Definitely look to changing people's lives and getting them in homes, because it's the fastest way to accumulate wealth in this world. Regardless of downtimes, it's still the fastest way to accumulate wealth here. So let's do that. Annie, thank you so much for your time. I love working with you. Scotty, thank you for your time. Everyone who joined us today, again, this has been recorded. We will send this out before end of day tomorrow. We thank you on behalf of everyone here at Angel Oak. Wishing all of you a happy holiday season, and God bless. Thank you.